of all, basically for the company to be able to show the sources of cash and basically the application of cash. So basically what that means is that once you're given a statement of cash flow prepared by a company, you should be able to see how the company generated cash and basically how that particular cash was spent. Now, a statement of cash flows basically should be prepared in accordance with this particular standard, International Accounting Standard number 7. And actually, this particular standard requires that when a statement of cash flow is being prepared, the various activities which are undertaken by the company, basically to be classified into three categories. I hope you can be able to recall those particular three categories. Number one, we have the operating activities. Number two, we have the investing activities. And number three, we have the financing activity. So anytime you are preparing a statement of cash flows as an accountant, what you need to do basically is to appreciate the fact that the activities of the company should be classified into three categories. Operating activities. So what do you mean by the operating activities? These are basically the revenue generating activities which are basically undertaken by a business entity. For example, a business entity may be providing services. A business entity may be selling goods to its customers for that business to be able to generate what? Revenue, or to generate what? Income. So therefore, operating activities, these are the revenue generating activities, e.g. provision of services, e.g. the sales of what? Of goods. Now, on the other hand, when we talk about now the investing activities, these are those particular activities which include acquiring assets and also selling or basically disposing what? Asset. And maybe for those who are doing AFR, and this also include acquiring a subsidiary and also disposing what? A subsidiary. And then we have the financing activities, and basically these are those particular activities which by the end of the day affect the size and the composition of the company's capital structure. So any activity undertaken by the company, it affects the capital structure of the company. That is the size and the composition is a financing activity, e.g. maybe the issue of shares, the issue of debentures, acquisition of bank loan, maybe the redemption of debentures which have been issued by the company, and so on. And then after classifying the activities into those three categories, in preparation of the statement of cash flows, we have to determine the net cash flows from each of these three activities, basically in that order. We determine the net cash flows of a company in that order. How do we determine this particular net cash flow? So to determine this, we take the cash inflow. Basically, when we talk about the cash inflow, this refers to any money which is flowing into the business. Like once the company sells an asset, the company receives money. Once the company issues shares or basically debentures, the company receives money. So the money which is received or money coming into the business, we basically refer to that as a cash inflow. The other rule is that when preparing the statement of cash flow, any amount which is a cash inflow, we record it in our statement of cash flow as a positive. As what? As a positive. So we take the cash inflows, and then to this we less the cash what? The cash outflows. So the cash outflows, basically, this refers to any cash which is flowing out of the business. And the rule is that anytime you are preparing a statement of cash flow and you come across an amount which is a cash outflow, then you record it as what? As a negative. So therefore, to determine these net cash flows, we take the cash inflows as positives, and then we less cash what? Cash outflows. So basically, we deduct the cash what? Cash outflows. That's why we are saying cash outflows. We record them as what? As negative. So by the end of the day, we will be able to get the net cash flow from operating, investing, and also what? Financing. So maybe the other thing you need to remember very fast is that when preparing the statement of cash flows, basically we have two methods which can be used to prepare a statement of cash flows, or in other terms, to present a statement of cash flows. We have the direct method, and also we have the indirect method. And actually, the difference between those two methods, that is the direct method and also the indirect method. Indirect method is basically how we determine the net cash flow from operating activities. That is the only difference. How we determine the net cash flow from operating activities. That is actually the difference between these two methods. So under the direct method, basically, we determine the net cash flow from operating activities using a direct approach. Basically, we go to the cash book prepared by the company. Number one, we take into account the cash received from debtors or customers, which is basically a cash inflow. Then to that, we less the cash paid to the suppliers or creditors. We also less the cash paid for operating expenses. We also less the tax paid and the interest which was paid. We will be able to get the net cash flows from the operating activities. That is now using the direct method. Now, under the indirect method, we compute the net cash flows from operating activities using what? Using an indirect approach. And actually, what we do under the indirect method, we take the profit before interest and tax, and usually we adjust it with 3 items. The non-cash items, which were added or deducted in arriving at net profit. Number 2, the changes in working capital, basically where we consider 3 items of working capital: receivable, inventory, and payables. And also we adjust that profit with any investing or financing activity item which was added or deducted in arriving at net what? A profit. So basically, I think that is the first thing you need to remember as far as the statement of cash flows is what is concerned. And I think with that particular quick recap, I want us to go straight to a question. And there is a question which has already been shared in the class chat box, maybe for those who are joining us right now. So there is a question which has already been shared in the chat box. So if you can be able to see that question, please confirm that is the question you want us to do. Can you be able to see that question, those who are just joining? If you can be able to see that question, please confirm that is the question I want us to do. Can you see that question in the chat box? Can you see that question in the chat box? I want us to use the question from CPA Foundation level. CPA Foundation level. That is the question 4B of August 2024. Yes, so can someone reshare that question afresh? Evans, please reshare that question afresh. Reshare that question afresh. Reshare the question afresh. Yes, so I think it has already been reshared there. It has already been shared here. So let's go through it. We see what we are told and equally what the examiner was requiring here. So the question reads, part B, question 4B, it reads, the following are the financial statement of Precious Limited for the year which ended 31st of March 2023 and 31st of March 2024. So we're given Precious Limited statement of profit or loss, which is for the year which ended 31st of March 2024. We have the gross profit, operating expenses. We have other incomes which include interest income received, the gain on sale of investment, and then we have the loss on sale of plant. And then from there we have the interest paid, the interest expense which was paid, and then we have the net profit before tax. We have the income tax for that year, and then we have the net profit after tax. So then from there we have the statement of financial position. We are given statement of financial position basically for 2 years, 2023 and 2024. It is important for you to note that anytime you come across a question for cash flow, always the examiner will give you the statement of profit or loss for the current year. And then for the statement of financial position, that is basically the balance sheet, you'll be given the statement of financial position for the current year. For example, in a case, the current year is the year 2024 and for the previous year. So what you need to note is that the figures which are given here in the statement of financial position of the previous year, 2023, these are treated as the opening balances, whereas the figure we have here in the statement of financial position for 2024, those are closing balances. That's basically what you need to know. So we have the non-current assets, which include PPE, property, plant, and equipment, at cost and also accumulated depreciation. We have the investment, we have the current asset, which include inventory, account receivable, cash, prepayment, and then we have the total current asset and the total asset. And then we have liabilities and capital, where we have ordinary share capital, revenue reserve. Revenue reserve, this is another name for the retained profit, or is basically another name for the retained what? Earnings. Then from there, we have the long-term liabilities, which include both. We have the current liabilities, which include account payable, accrued liabilities. And then we have tax payable. And then we have the current liabilities, total equity and liabilities. Then we have additional information, number 1, all the way to note number 7. So what then are we required to do here? We're required to prepare a statement of cash flows, which is for the year which ended 31st of March 2024, in accordance with the International Accounting Standard number 7, which governs the preparation of the statement of cash flows. Now, in this case, number 1, recall what we have said. There are 2 methods which are used in preparation of cash flow. We have direct method, we have indirect method. But if you check on this particular question, the examiner has not specified which method we need to use, whether we use the direct method or basically whether we use what? We use the indirect method. But anytime you come across a question for cash flow, you are given the income statement or the statement of profit or loss, statement of financial position. If the examiner is not specific on which method to be used, always use the indirect method. So the indirect method basically has so many free marks when it comes to computation of the cash flow from operating activities. So that is the first thing you need to do. The other thing, assuming this is a question you are doing in an examination setup, it is not advisable to start with the workings because this where or what make majority of the students to fail in these particular questions. So how do you get free marks, or basically what you refer as the low-hanging fruits? So basically what you need to do is that once you come across a question for cash flow, number one, never start with the workings. Just go straight to what the examiner is requiring you to prepare, because the 16 marks which are allocated there, they are allocated for preparing a statement of cash flow. So if you do all the workings, they are correct. By the end of the day, you fail to prepare the statement of cash flow, you will get 0. So therefore, what you do, go straight to preparing what is required. Basically, any working which you do it per need basis. You are doing a working to determine an item to be posted in the statement of cash flow. So therefore, what we do, we go straight to preparing what is required. And actually, we need first of all to have the title. So the name of this company is Precious Limited. Precious Limited. And basically, this is the statement of cash flows. The statement of cash flows. And basically for the year, which ended 31st of March 2024. 31st of March 2024. Obviously, you must have the title. You must have the title of what you're preparing. And then from there, you need also to remember, in preparing this particular statement of cash flows, we have to determine net cash flow from 3 activities. So can you have those particular 3 subheadings? So basically, always, we start by determining the cash flows from operating activities. That's basically what we know. We start by determining the cash flows from operating activities. So here we need to have 2 columns, and I hope you can be able to see that if you go back to that question, all our figures are given. The figures in the income statement or the statement of profit or loss, the figures in the statement of financial position, they are given in thousands of shillings. So you need to have 2 columns here like that. So then from there, you leave some enough space here, because when computing the cash flow from operating activities, we have so many items which we record here. So leave enough space. And then from there, you have the other subheading for basically determining the cash flow from what? The cash flow from investing activities. And basically, remember, in this case, we have said investing activities are those activities which involve acquiring assets and also selling assets. So what we record here are the assets which were acquired, the assets which were purchased, and the assets which were sold. So we don't have so many items which we record here. Leave just enough space, not a big one. And then from there, we have the other subheading for determining the cash flow from the financing activities. And actually, all the items which we record here, we get them from equity and basically the non-current liability section of the statement of financial position. All the items which we record here, we get them from the balance sheet, specifically at the equity and non-current liabilities. And then down here, we come and we record something known as the cash and cash equivalent. This is cash and cash equivalent, a balance, a brought down, and also we record the cash and cash equivalent, a balance carried what? Balance carried down. Balance carried what? Balance carried down. That's the first thing you need to have anytime you come across this particular question for what? For cash flow. Anytime you come across this particular question for cash flow. And then having that now, I want we proceed and we look on how then do you get the low-hanging fruits. So there are the low-hanging fruits. Remember, we have said that these are the free marks. These are the marks basically you get without any working, without any what? Any working. So basically, the first thing I advise my student to record is this: cash and cash equivalent at the start and also at the end of the year. So what do you mean by cash? Cash, basically, you can be able to recall This is cash in hand, a cash at bank, bank overdraft, and then cash equivalent. These are the short-term investments. The short-term what? Investments. So basically what we need to do is we go to our statement of financial position under the current assets. We check whether we have cash in hand, cash at bank, short-term investment, and then still we will go to where we have current liabilities. We check whether we have a bank overdraft. So can we do that? The first thing, we go to the statement of financial position, specifically under the current asset. So under the current asset, can you tell me which item of cash and cash equivalent do we have there? Which item of cash and cash equivalent do we have under the current assets? So tell me which item of cash and cash equivalent we have there. Which item of cash and cash equivalent do we have? Do we have under the current assets? Type it in the chat box. Yes, I'm told the first one is basically cash. Is actually what? Cash. You also check, do we have bank balance? No, we don't have bank balance. Do we have any short-term investment there? No. So therefore, and remember what we have said, that we are given statement of financial position for 2 years, 2023, 2024. So the balances we have here, these are opening balances. In other terms, these are what we refer to as the brought down. The brought what? Down. Whatever we have here, these are closing balances. This is what we refer to as the current what? Down. That is also very, very important. Very, very important. So therefore, what we have is cash. So what we do, we take cash, and basically the cash, we take cash at the start from the statement of financial position for 2023, and I hope you can see that is a figure of 2250, and then from there we go to where we have the current liabilities. We check, do we have a bank overdraft? So under the current liabilities, do we have a bank overdraft? Yes or no? Do we have a bank overdraft? Yes or no? Under the current liabilities, do we have a bank overdraft? No. So but if we had a bank overdraft is basically money which is owed to the bank. We come and we raise it here. So therefore, the cash and cash equivalent at the stand is how much? Is 2250. So we do the same. We do the same at the end of the year. So by now we know that we only have one component of cash and cash equivalent, and that is basically cash. So what we will do, we will take the cash and cash, the cash balance at the end of the year, and basically that is an amount of how much? That is an amount of 69. That is an amount of what? Of 69. Yes, someone can, someone to share that question, in the chat box. Someone to share that question in the chat box. Someone to share that question in the chat box, please. Someone to share that question. Someone to share that question in the chat box. Okay, it has already been shared, Janet, there. I hope you have seen it. Yes, so that is the first thing you record. And in most of the cases, what is important for you to note, what is marked in these particular questions are the entries. Are what? The entries. And basically, mostly this particular question for cash flows, how are they marked? This is how these particular questions are marked. So like you can see the marks are located here were 16. So mostly this particular question will be marked like this. Any 8 correct items here, you are given 2 marks. So mean that if you get 8 correct entries here, you'll get 16. Alternatively, if the question has so many entries, the question can be marked like this. Any 16 entries at 1 mark, and basically you get what? The 16 mark. So it depends with the number of entries. So if a question do not have so many entries, it can be like marked like that. If the question has so many entries, it will be marked like that. So therefore, what is important here is not by the end of the day to do so many workings here. What is important when preparing a statement of cash flow are the correct entries you make here. Are the correct entries you make what? In the statement of cash flow. For example, those 2 correct entries, those 2 entries, they are correct. Those are already 2 ticks. Yes, after doing that, then we come back here to where we compute the statement of, or actually we compute the cash flows from operating activities. And remember, in this case, I've said here, we are preparing this particular statement of cash flows using the indirect method. So under the indirect method, we compute these particular cash flows by starting here, or here we start with the profit before what? Before tax. When computing this, we start with the profit before tax. Where do we get the profit from before tax? We get this from the income statement. Can we go to the income statement? You give me the profit before tax. How much is the profit before tax from the income statement? How much is the profit before tax from the income statement? So in our case, it is referred as net profit before tax. Net profit before tax. Can you see that one? Net profit before tax? Yes. So the net profit before tax is basically an amount of 450. But if you can be able to recall, we said in computing this particular cash flow from operating activities, we should start with the profit before interest and tax. In other terms, what is known as the operating profit. But if you check, in our case, we don't have that operating profit. So therefore, what we say is that to this particular profit here, the first adjustment which we make, or the first adjustment to this profit, is basically to add back the finance cost, which is also known as the interest expense. The interest expense. And actually, this interest expense is always above that profit. Is always above that profit. So can you see that figure of the interest expense? Yes, the interest expense is the same. That is an amount of 3450. And actually now that will give us the profit before interest and tax. And then from there we say to this particular profit, we need to make a number of adjustments. The first adjustment we make to this profit is basically to adjust it with the non-cash items. We say the non-cash item. For you to be able to remember the non-cash item to be adjusted to this profit, just remember that acronym. The acronym is dial G. Dial G. So this stands for what? This stands for depreciation. This stands for depreciation on property, plant, and equipment. This one stands for impairment loss. Impairment loss on goodwill. Impairment loss on goodwill. A stands for amortization. Amortization of intangible assets. Amortization of intangible assets. Then this one stands for loss on disposal. Loss on disposal. So the loss on disposal is basically whereby the company disposed or sold some assets during the current year, and basically the asset was sold at a loss. They were sold at what? At a loss. And this one is basically stand for gain on disposal. This one stands for gain on what? On disposal. So therefore, what we need to do, we need to go to the additional information. But I think even before you go to the additional information, because most of these items will be given in the additional information, on the face of the income statement, there are a number of items we need to adjust to these. We need to adjust to this profit. So can we go back to the income statement or the statement of profit or loss, and specifically whereby we are given other incomes? Specifically whereby we are given other incomes. So where we are given other incomes, number one, we are given something called the interest income received. Now, interest income received, is that an income from operation? That is the first thing you need to ask yourself, because what you want to determine here is the cash which was generated from operating activities. Now, anytime you're given an interest received, a company receives interest as a result of having invested. So therefore, what you do, because that interest has already been included here, you come here and you less it. So first of all, we can skip all these items, and then we take the interest which was received, interest income which was received, interest income which was received, which has already been added in this profit. So the reason why we are raising this is because this is not an income from operation. So this is an income generated by the company from what? Investing. So you raise it from that profit, and then you come and include it here. So that is the interest income which was received. And remember, this is money which was received. So when recording it here, you record it as a positive. So why are you recording it there as a positive? It is because it is cash which was received, is an inflow. But here we're recording it as a negative. Why? Because we want to eliminate it here from this profit. It is included there, but it's not income from operating activity. So you less it here, and then you bring it there. That is the first item. Then still under the other income, we have the gain on sale of investment. So the gain on the sale of investment. So anytime the company sells an asset, be it an item of PPE, and that item is sold at a gain, so that gain is usually accounted for as an income, but basically we say that is a non-cash item. That is a non-cash item. So take into account it is included there. What do you do? Place it down there. Then also below that, the gain on the sale of investment, we have the loss on sale. We have this. So the loss. So the loss, basically is 450. You can see the loss in arriving at this particular profit, it has been deducted. It was accounted for as an expense. So, and because this is a non-cash item, what we need to do, we need to add it back. Actually, these non-cash items, basically which we have here, depreciation, impairment loss, amortization, and the loss on disposal, because in arriving at this profit, they had been deducted, what you do, you add them back. But now this gain, you do what? You less it. That's basically what you need to remember. Yes. So you can see that all these are free marks. All these are free marks. This is basically what we refer to as low-hanging fruits. These are basically marks which you're able to get in this particular question without any struggle. Without any what? A struggle. You can see so far we have not done any working, but we have so many entries here. Yes. Now, having said, I think we need to go to the additional information because we don't have anything else we can be able to pick from the statement of profit or loss. Let's go to the income statement. Not the income statement, in the additional information. In the additional information number 1, we are told Precious Limited purchased investment worth 11.7 million during the current year. So this company purchased investment. So if a company purchased investment, remember is a form of an asset. And that's why if we go back to our statement of financial position, specifically where we have the non-current asset, you'll be able to see we have the property, plant, and equipment. We have accumulated depreciation. Below that, we have investment. So we have said those particular activities which involve acquiring and disposing assets, they are what? Investing activities. So that purchase of investment, you come and you record it here. Purchase of what? Purchase of investment. Purchase of investment. So the investment which were purchased were 11.7. And I hope you can be able to remember, in all the figures we are given in the income statement of financial position, the last 3 zeros are omitted. So anytime you're taking a figure from the additional information, you must do the same, omit the last 3 zeros. Then you also need to remember our rule here. When preparing the statement of cash flows, we have said this rule is very, very important. This rule is very, very important that any amount which is a cash inflow, we record it here as a positive. Any amount which is a cash outflow, we record it in our statement of cash flow as what? As a negative. So now who can tell us this particular amount here? Once the company purchased an investment, is that an inflow? That particular amount there, is it an inflow or outflow? The company purchased an asset. Is that an inflow or basically outflow? Inflow or outflow? Who can tell us? Inflow or outflow? Yes, automatically this one is outflow. This one is what? Is outflow. So take into account is an outflow. We record it here as a negative. Don't forget, if you record it there as a positive figure, it is wrong because the person is marking will only give you mark if it is recorded as an outflow. We are done with that. Let's move to note number 2. We are told the company sold a new investment that had cost 13.5 for 15.3 million. So we have sale of investment. So remember what we consider here is asset which were acquired, asset which was sold. So in that case, we can say there was sale of investment. There was sale of investment. And basically, once the company sells an asset, what do we consider here? What we consider here is the proceeds. When talk about the proceeds, this is the money you receive after selling an asset. If you sell an asset, how much cash do you receive? So in that case, we are told in note 2, that investment had a cost of 13.5. It was sold for 15.3. How much cash was received in that case? Is it 13.5? Is it 15.3? How much cash was received? You can tell us here. The cash inflow, the sales proceeds, that's basically what we consider here. Yes, I'm told by Evans that the cash received here is 15.3. 15.3 units. Yes, that is very much correct. 15.3. And then 15.3, this is an inflow. When you sell an asset, you receive money. You sell an asset, you receive what? You receive money. You receive money. Yes. So basically, that is it. That's what we need to recognize here. So we are done with that. Let's move to note number 3. We are told during the year, a new machinery worth 18 million was acquired. Was what? Acquired. That is also another free entry here. So the company acquired a machine So once the company acquires machines, that is still an investing activity. So we say there was acquisition of what? Of a machine. There was acquisition of a machine. You can see the number of entries we have in our statement of cash flows, yet we have not done any working. Have we done any working, Kelvin, here? Have we done any working, Eunice? Have we done any working, Evans? We have not done it. And you can see the number of entries which we have. So because I've said what is marked in these particular questions are these entries. This is basically what we refer to as the low-hanging fruits. This is basically what you get without a lot of struggle. So and then you are told in the same point number 3, sentence 2, some item of property, plant and equipment at a cost of 1.5 and accumulated depreciation of 300,000 were disposed for 750. So many free marks here. So we have disposal. Disposal, remember, is the same with the sale. Is the same with the sale of an item of PPE. What do we consider here? What we consider here is the proceeds. So that item of PPE which was disposed, we are told it was disposed for how much? Can you see the sales proceeds here? So that item which was disposed, was it disposed at 1.5, 300 or 750,000? It was disposed for how much? What is the sales proceeds? That is basically what we consider here. Yes, the amount which you consider here is 750. 750. The sales what? The sales proceeds. So basically we are done with that point. Let's move to point number 3. Point number 4. We are told included in the operating expenses for the year which ended 31st of March 2024 is depreciation charged, and the depreciation charge for the year which amounted to 5,550,000. So in our case, we come back here, we are given this depreciation, which is 5,550,000. That is another free entry. So, and we said that this is a non-cash item. It was deducted in this profit, we add it back. That's when we say this part, these 4 items there, we add them to the profit. So we are done with that. So we move to point number 5. We are told the company issued bonds worth 15 million at a face value in exchange of a plant asset on 31st of March 2024 and repaid bonds worth 7.5 at the face value, at the face what value. Now in that case, we are given 2 transactions in one point. One, we are told the company issued bonds. Bonds are basically the same with the debentures. So bonds are the same with the debentures. So mean that if you go to the balance sheet, to the statement of financial position and the non-current liabilities, you should be able to see bonds there. And I hope you can see that in our statement of financial position and the non-current liabilities, we have both. Bonds are basically the same with debentures. We are told that there were some bonds which had a value of 15 million, which were issued in exchange of a plant. Let me first of all ask, is this, or do we have any movement of cash there? The moment the company issued bonds in exchange of an asset, do we have any inflow or outflow to the company? Do we have money flowing in or money flowing out? You issue bonds, you receive an asset. You issue bonds, you receive an asset. Is there any movement of cash there? There is no movement of cash. So therefore, what is important to note is that when preparing a statement of cash flow, actually from our definition, I said, it is prepared to show the sources of cash and the application of that cash. How was the cash generated by the company you traced? So therefore, in preparing a statement of cash flow, any transaction which does not involve movement of cash, any transaction which does not give rise to cash outflow or cash inflow, we don't consider it here. Sasa, yes, like that transaction will not be considered here. It's a non-cash item. But also on the same point, you're told the company repaid bonds. So when talk about repaying bonds, you see bonds are issued by the company for the company to borrow money. So the company usually will have agreed with those who will buy bonds that they will be given back their money after a number of years. For example, the company can issue bonds having a life of 5 years. So meaning that the holders of the bond will be given back their money. In other terms, the company will pay back those particular bonds at the end of the 5th year. So once the company repay bonds, that is a cash outflow. And where do we consider that? We consider that here. That's why we said all the items which you record here, we get them from equity, non-current liabilities. We know both are part of the non-current liabilities. So here we will come and we say there was a repayment of bonds. There was a repayment of bonds, basically which had a value of 7.5. And this is cash outflow. The moment the company repay back the bonds, which had been issued that involve cash what? outflow. So we are done with that point. So let's move to point number 6. And you're told the company issued 2.25 million ordinary shares of shillings 10 per, basically per value. So where do we consider this? This one is considered here. And basically, can you go to where we have, because that basically affected the share capital. Let's go to where we have share capital. And basically, in that case, you can see the share capital increased because remember, in our case, we are given a statement of financial position for 2023. I've said these are opening balances, and 2024, basically, which you have said are closing balances. So you can see the ordinary share capital at the start was 47 to 50, and then at the end of the year, the share capital increased. So the reason why we have an increase in share capital is because the company issued shares. So who can tell us how much is the increase here? The increase is how much? The increase, that increase in share capital, yes, I'm told by Evans is 22,500. So basically, as per point number 6, we are told this increase was due to issue of how many shares? The company issued 2250 ordinary shares, each share having a value of 10. So if you multiply this, the value of each share with this one, you'll see that will automatically give us that amount. So when the company issues shares, that one is considered here is a financing activity. The company issue a share to do what? To raise finances. So we say there was issue of ordinary shares. So how much amount was received? 22.5. So the amount received by the company is a cash what? Inflow. So we consider that here. Yes, we consider that there. So then after that, we move to the last point, number 7. The company paid cash dividends of 1.2. This was a very, very simple question. Almost everything is provided. So once the company paid dividends, those dividends paid are recorded here. So we say cash dividends paid. Cash dividends which were paid how much? 1.2. So the moment the company paid dividends, that is a cash outflow. That is a cash outflow recorded here as a negative. Recorded there as what? As a negative. Are we done with the notes? Yes. Can you see the number of entries we have here? Even if, for example, the question was marked like this, because this one automatically, you can see it has so many entries. So automatically, for every 16 ticks, 16 correct entries, you get a mark for each. And basically, by the end of the day, you get how many marks? 16. Can you see the number of entries we have? Basically, we have not done any working, but you can see the number of entries we have. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. If you decide to read that question like that, you'll be having all the marks. And basically, that's a question which you should be able to do within not even more than 30 minutes. Because the other thing, maybe for those who are doing the CASNEB exam for the first time, so you'll come across a question with 5 marks. 5 questions. You're given 3 hours. So if you take 3 hours times 60, that basically comes to a total of 180 minutes. 180